Hey, this is Joe. Ask Joe about money. It is March 1st, 2023, and it is just about market close time. And I'm going to be doing the market review. And we have a 5-minute chart. This is yesterday's price action. We opened up here, but what I want to do first, just to get some context of what's been going on so far this week. So this was Tuesday. And this was Monday, right? So let's see. Yeah, that's right, because this was Friday. Okay, so yeah. So this week so far, because context, when we're doing a review, we always have to be aware of context, because where are we? So for example, on Monday, we gapped up, we tried to push down, and then we failed at resistance. Then we sold off, okay? Tried to almost close that gap right there. Then we rallied, came down, back up. Okay, so now at this point, once that happens, I draw my lines for the upper end of the channel. And yesterday we sold off and we closed right at the low. And today we have a range bound day. So where are we? This was last Friday. So we are in the same zone of support from last Friday. Now what I am noticing here, on last Friday when we were at support, okay, what happened? Look, we made higher highs, right? So 1, pullback, 2, pullback, 3, and then we get a final pullback, and then we gapped up. So these are higher highs, right? What are we seeing here now that we're down here? We're seeing lower lows, right? We're seeing, or these are, I should say, these are higher lows. We're making higher lows, higher low, higher low, and now we're making lower highs. So high, well, first of all, look at all these wicks up here. They tried buying, so failed. So this was today, and now for now we're making another lower high. So the market's going to be closing here, so we're not going to do anything right now. But when we come into tomorrow, and we're going to review today's trading as well, when we come into tomorrow, we're going to be aware of is that when we look at these trend lines, right? Guys, this is not perfect, right? We just try to draw the best fit line that we can. And when we look at this, really what we're looking is that the reason why I draw these lines, not so much because we know the exact tick of where support or resistance is. That's not the point of it. The point of looking at it this way is that now in this last last 4 trading days, I now have context. Because if you look at this as a downtrending trading range, right? If you look at this as a downtrending trading range, right? It has a tilt to the downside. Basically, every time it goes up, sell, up, sell, up, sell. So that's what's happening. Can this reverse and go up? Absolutely, you can do that. Absolutely. But what we're looking at right now is that because when we come in tomorrow, what we look at is we have our support is down here. So we are in our buy zone, right? We're in our buy zone. The issue is there's only a certain amount of time that we could be in the buy zone before that buy zone gets eaten up by all the sellers. So in other words, this was the buy zone last Friday. We went up from there. Market came back down. It tried there. It bounced. Then it bounced. But it couldn't bounce further than this high up here. So now again, it's bounced. But so buyers that's what the trend lines represent. Buyers are running out of steam. That's not my opinion. That's simply what's happening, right? That's simply what's happening. So that's so important to know, because if we come in tomorrow and we have a gap down, that may be a gap and go to break below support, or this could be the buy point for us to head up from here. So that's the context, right? That's the context that is going to help you to prepare for tomorrow. But what we're going to do right now, is we're going to look at today's action. We just talked about the context, because context is very important. Because if you see this all the time, if you see this 3-bar pattern, 4-bar pattern, without context, I would tell you this is a buy without knowing what's happening here. So bar patterns are only important to the extent that you could match them up with context. Because if you just show me these 4 bars, I would tell you this is this morning, right? I would tell you, wow, sellers got met with buyers, and then a big green bar. This would be a screaming buy from me because I'm seeing buyers. Here's the problem. Context, right? Context, because what happened was I knew yesterday we sold and we closed at the low, so the market's weak. We've been on a mood has been more bearish than bullish over the last 3 or 4 days. That's just what's happened in the last 3 or 4 days. Do I want to be buying here when we're gapping down and we're going into the moving average? No, I didn't. Also, is that I was noticing every time red bar, green bar, red bar, green bar, red bar, green bar, red bar. So it's okay. Trading range open. Now they're selling it. But same thing, I just the same was not interested in the short because from what's happening so far, there are going to be buyers here, right? They're going to be buyers here. But now, okay, once they put in this bear bar here, okay, and again, there were buyers here. That's why I didn't want to short into this candle. But now they tested it. If they go back down again, I will be willing to get short because, and I did get short. The reason why was because they came down so aggressively. Now they bought it. So now, if their buyers are real, there should be a green bar coming in next. Let's see what happens. All right, so this is what happened. So as this bar turned down, I got short right as it was going through the lows. So I got short right around there. So my risk was, so this was the trade. My risk was above here, right? So that was the initial risk. And then let's see how I manage this one. Okay, so now I'm seeing a little bit of a tail on the bottom, but again, I'm going to manage it based on price action. I can't move my stop down until I see them make go and then reverse it back down. So I can't move my stop, but I'm going to be managing it because I have profit made here. And so now with this green bar, so what I did with this personally is I put my stop right above that green bar when that green bar closed. I put my stop above there, and I don't remember if it got me out right there or not, but I put my stop there. I remember that. And so basically I locked in that much in profit, and yeah, it did get me. So that was that trade. That was the risk. That was the trade. Okay, let's see what happened. So now at this point it's consolidating down at the lows, and now they put a big green bar. And I could tell you is that just me personally, I wasn't ready to take any longs today, and that's okay because what I find is that as a professional trader, it's very hard to be switching back and forth. I have a short bias only for the reason of that's what has been happening, but I want to be looking to short at resistance and buy at support. So again, for me, I just wasn't ready to take the long, but if you look at it from the long side, still big green bar, but it rejected at the moving average. Let's see what happened next. Okay, another green bar, but wicks on top. And again, in the face of this, to me, I just was not interested in the long. Then the market reversed down. Okay, but again, so now we're still in this range. So if you look at the market, up, down, up, down. So trading range type behavior. So now we come down here. All right, so now we come down here. And I wasn't ready to take a short down here because we're at support. So I didn't take that. I didn't take those trades. And then I didn't take, again, this is because the reason why I didn't take that is because, look, that was a likely area for the market to turn around, and it did. But now what I was interested in, and this is a trade I did take, is that once it comes back up here, so lower high again. So now I'm looking for a bar to get short, okay? And what happened is right after, actually this bar, at the close of this bar, so I put a risk box on it of this big. And the idea of this trade was very simple, which was, the idea was a lower high, and this could come down to support. And yeah, so actually, so what happened here is they actually got me out here, okay? But this is how I'll trade this, and this is me personally. They got me out, but when they get me out that way and they wick it back down, I got back in. So I ended up getting, I'll let the stop take me out, but then I got back in. So that was essentially the same trade. And then except for this time, I put the risk box in it this way. You can't worry about what just happened. I got to worry about now what do I do with new information, because 5 minutes ago I didn't know that. Now I know that. So now I still wanted to be short because they rejected it again. And then they just, you could tell they just started making lower highs, just no. So the thing is that, again, they tried for all of these bars, 1, 2, 3, 4, 5, 6, 7, 8, 9, more than 10 bars trying to find buyers at a known area of resistance. Eventually, when they run out of buyers, the market doesn't just stay here. The market has to go down because the buyers tried. Once they realize that it's not going up, they're going to get out, and then the shorts are going to start selling, so the market's going to go down. All right, so they try again, fail. And this was a tough trade to hold because holding through all this, right? This was during lunchtime, but I kept seeing the rejection. My And that's why, see, this trade needed 2 attempts because I got stopped out the first time and then I had to do it again. So it was okay because look, the market's not perfect. The market's not perfect. And then we started selling off, and then I'm looking for this is not really aggressive selling as compared to this. So I wanted to just keep my stop up there. But how did I end up getting out of here? Okay, so once I saw this bar here, I wasn't ready to move. I was looking for the reaction of this bar right here. So I didn't move my stop yet, but I don't remember if I got out there. Did I? Nope, it didn't go above that. I didn't get out there. So I stayed in because it didn't go above that bar. Now once I see this bar and they tried, and you could just see there's a wedge going down, right? So it's like buyers below, buyers below. So not much enthusiasm. So once I saw this bar with the tail below, I put my stop above, and I'm pretty sure that's where I got out. Yep, that's where I ended up getting out. So in this trade here, I ended up locking in this much right above there, just like that. Yeah, and I mean, at this point, once it was going down and kind of like dribbling down, and it's coming down to support. I don't think I took any trades the rest of the day. I don't even remember, to be honest with you. No. Yep. So that was a day. So basically, a range-bound day. So in a range-bound day, you want to sell high, buy low, right? Sell high, buy low. And of course, you're not going to buy at the low tick. You're not going to sell at the high tick. But if you're generally selling at a high price, you have a better chance of making money. And if you're generally buying at a lower price, now could I squeeze some more out of this? Sure. All these pullbacks, it was just, I don't like trading when the market's like this. So that's about it. That was the day. And we'll see you guys tomorrow, and trade and manage your risk.